Hey guys, welcome back to Home Sweet Home Hawaii, and we are here again with John Keifer. Today we're going to be discussing the different loan options that are available to Hawaii buyers. Welcome, John. Looking forward to you going over all the loan options available to us here in Hawaii.
Thanks for having me.
This is part 2 of our part 3 series on the hottest topics around loans, where we're going to discuss great financing strategies and what to look out for when looking to buy or invest in Hawaii. My name is Chris Shomo, owner and founder of Home Sweet Home Hawaii, brokered by eXp Realtor. John is a seasoned professional in the real estate financing field, and he specializes in loans for residential properties and investments, as well as VA financing. He's incredibly knowledgeable, and one of the reasons he's so respected in this industry is because he knows how to take complex real estate and lending concepts and break them down and makes them easy to understand for homebuyers and investors. He has a stellar reputation. Obviously, feel free to search him online and read all the glowing reviews. He also goes by his industry nickname, Johnny Loans. And stick around to the end, where we're going to share with you why it's actually more important to work with a local lender here to Hawaii. You know, this is such an important topic, not just for first-time homebuyers, but of course the seasoned professional investors, and also those who are new to the Hawaii market. But going back to first-time homebuyers as well, who have dismissed the idea of even being able to buy a home, right? Because of the high price points and not sure that they can even afford to buy here. They just assume it's not feasible to buy into the market and are just caught in the rat race of renting, right? So that's where you come in, and where it's really important to educate the public to talk about the different loan options that are available to buyers, whether the first-time buyers or, again, the seasoned investors. And where one particular loan option or product can help out in any particular situation. So John, let's talk about the different loan options. So you've got the conventional financing, you have the ARMs, which are the adjustable rate mortgages. I'm sure the audience is familiar with that.
Yeah.
But let's get into some of the options out there for buyers here in Hawaii, as well as investors.
Yeah, sure. Yeah, so there's a lot of different lending options out there depending on what the needs of the client are, right? So like for properties that aren't conforming, so like your properties that have short-term rentals in them, those condos that you can rent out nightly to like Airbnb and things like that.
Yeah.
Those don't conform to the Fannie and Freddie guidelines for conventional lending.
Okay, share with that. What do you mean by that?
The Fannie Mae?
Yeah.
So Fannie Mae and Freddie Mac are what's called government-sponsored entities. We call them the GSEs. So they're technically not government agencies, but they're kind of overseen by some government agencies.
Gotcha.
Right? So the GSEs make the rules and for how these loans can be structured, the credit score needed, the type of property, the down payment amount, all those different things. Okay. And then the reason is because of those loans that are conforming loans can be securitized and sold on the secondary market,
Gotcha.
Like stocks.
Okay.
So it's called the mortgage-backed securities, MBS. So if you ever see the ticker and it says MBS, that's mortgage-backed securities. That's basically bundling and selling, buying and selling of big bundles of mortgages, like billions of dollars. They're being sold on the secondary market. So loans that don't conform can't be sold in the secondary market. They can be sold between institutions, but not on the secondary market, like a stock.
Okay.
So short-term rentals are not allowed on conforming loans. So those properties that are on Airbnb, the nightly rentals, those don't conform, but we can still do loans in those buildings for those units, but it's what's called a portfolio loan. So the investor actually makes the rules, and then they'll lend on that building and that special unit. But because they can't sell it, they have to keep it in their portfolio, which is why they call it a portfolio loan.
I see. Are there instances where you can use conventional financing for those short-term rentals?
No.
Okay.
No. Because, only if they're doing it illegally.
Gotcha.
Right? But if it's a legal short-term rental, it doesn't conform.
Okay,
Yeah.
That makes sense.
Yeah.
So we talked about conventional loans. Let's talk about the adjustable rate mortgages.
Sure. So
do you see many of those?
Not too many anymore.
Yeah.
So it used to be a great strategy because ARMs used to be a really popular loan type, especially like during the the early 2000s and even before that. So an adjustable rate mortgage, so the rate is fixed for the first portion of the loan, so maybe the first 2 years. What some people do is they'll get like a 7-year ARM or a 10-year ARM because the introductory rate is lower that way. This is a little bit of a hack.
Okay.
And so they're like, okay, I mean, and they have to, it's a hack for people who are, not risk averse. Like they're taking a chance. So basically they'll get like a 7-year ARM at a lower rate, knowing that at the 8th year, it's probably gonna spike up. But before they get to that 8th year, they refinance into a 30-year or a 15-year.
Okay, cool. So you're not locked into that full 7 years. You can always refinance.
Yeah, you can refinance.
Okay.
Sometimes there's a prepayment penalty if you refinance too soon, but it's usually 1 or 2 years.
Okay. Tell me about some other loan options for investors. What do you see investors doing here? Are they doing the portfolio loan? And can you share a little bit more about the portfolio loan and what that looks like?
Sure. So portfolio loans is usually what in Hawaii, that's the type of loan we use for investors for the most part. Portfolio loans. There are certain other types of loans that work on the mainland, but they don't really work here because of the cash flow issues. But basically, the portfolio loans, they have a higher down payment requirement than a conventional loan. So it's going to be, you could do 15 to 25%, somewhere in that range, we'll find the loan that fits. So there's definitely a down payment required.
People think of portfolio loans, they probably think, oh, I need like a giant 401k and I'm borrowing against that or something, or I have, a couple million stacked up in a bank and that's what I'm doing. I'm using that as my portfolio. Does that have anything to do with it? You just see what I'm saying? Like they think, oh wait, I don't have a $2 million portfolio. I'm not able to borrow against that.
I never thought about that
That's
before.
a misconception.
Yeah. I'm glad you brought that up because I'm going to keep that in mind next time I'm talking to clients about portfolio loan.
Yeah.
It's the bank's portfolio that is going to go on, not the buyer's portfolio.
Yeah. So are you guys picking up on that? So it's a big difference. It's not your money that you're using. That's just what they call it.
Right. Call it portfolio because the bank's not going to sell that loan because it doesn't conform. So traditionally, a portfolio loan would come with a little bit higher interest rate, but things sometimes are upside down. So recently, I had a loan where the person, they could do a conforming loan and the rate was going to be a certain rate. But then we looked at other options and we said, let's just look at portfolio even though it conforms. So we looked at portfolio and the rate was actually lower on the portfolio.
Wow.
Yeah. So what happens is sometimes these investors, these lenders that we work with, I call them investors, they'll have some kind of special, like we're trying to fill up our portfolio, so let's lower the rate and get our portfolio filled up. And then if you go back in 2 months, that rate is gone, it's back to high level. So you have to know that your loan officer knows what they're doing, especially in Hawaii.
That's actually a huge advantage right there.
Yeah.
It's really important to know that. And how is it like someone like you will be aware of when that lender needs to fill up their portfolio? Do they reach out to you or do you have to constantly reach out to them?
They do, they reach out to us pretty much every day. My inbox is filled with emails every day and it's most people would say, oh, that's spam, but it's not. It's basically dozens of investors emailing me every morning saying, hey, we have this special, we have this special, we have this special, we have this thing, we have this for business. We can do 1099, we can do all these things. And so I kind of scan through it, delete. Oh, that one looks interesting, I'll keep that, delete.
And that is why you want to work with John, to get the inside scoop on great rates that are going out there that the general public doesn't know about.
So speaking of being able to like find these loans that, are kind of creative, we just closed an FHA loan, which usually, an FHA loan requires 3.5% down payment. That's the minimum. But we found a lender that will do a 0 down FHA loan. We closed one, and then a few months ago we closed the second one. So that's 2 in the last 6 months. So basically what this lender does, watch this. They say, okay, we're gonna do an FHA loan. You don't have the 3.5% down, we'll give it to you as a second loan. It's gonna be kind of a portfolio mix kind of thing.
Okay.
So we'll give you the second loan. And if you need an extra 1.5 or so for closing costs, we'll make that a 5% second loan instead. So not only did our buyer have 0 down payment, also had 0 closing costs because it was all wrapped right into that
Oh my
second
goodness,
loan.
that's awesome.
Yeah.
I've got a couple clients that you can do that for.
Okay, great.
If they're still open to filling in their portfolios.
Yeah, absolutely.
That's really good to know.
Yeah.
So I know this isn't a traditional wheelhouse of lenders and loan officers, but the assumable loans. Can you share a little bit about that?
Yeah, sure. So government-backed loans are assumable. Government-backed loans are VA loans, FHA loans, and USDA loans. So for a VA loan, it's really a hot thing right now. Everyone wants to assume a VA loan at like 2%, 3%. Those that were.
That's right. We're seeing it in pretty much every listing out here.
Yeah.
Now that inventory is not moving as quickly, as an incentive, a lot of sellers are offering to basically allow the buyer to assume their lower rate.
Right.
But there's some big caveats with that.
Yeah, there are.
And it's very tough. And I'll just share one caveat. For example, let's just say a single family house is $1 million, right? And the remaining mortgage balance on that house is $800,000. Well, the VA buyer, that buys with no money down. And by the way, we have another video just entirely focused on VA lending, and I definitely want you to connect, and we definitely want you to look at that video, and there's a link in the description below for that one. But here you have a $1 million house with a mortgage of $800,000. But in order to assume that loan, you've got to come up with a difference of the mortgage amount and also with the sales price. So you're acquiring this house with this low interest rate, but you have to come out of pocket. The difference between the mortgage and the purchase price is like $200,000, and many people can't do that, obviously.
Right. And so that is a tough hurdle to overcome, because there was a lender that I know that was doing those gap funding loans. Like they would do that second loan, but it's rare. I don't think they do them anymore. And here's the thing that's really difficult about the assumable loans. And if you can buy a home with an assumable loan, go for it. I mean, it's a great deal. Just have patience and it's going to take 60 days, maybe 90 days, depending on the lender.
Yeah, it's another huge con you've got to consider.
Yeah.
It could take at least 60 days to 90 days, sometimes months.
So both the buyer and the seller have to be motivated with that kind of patience, right?
Yeah.
Is the thing about it is whoever the lender is of that loan, they get to call the shots. No other lenders involved. It's just that lender. And so the seller and the seller's agent have to connect the buyer with the seller's lender and have to fill out a whole packet and do this whole thing. And then that lender gets them qualified or says yes or no. And then they have to go through the process with them.
Yeah, and it can be a very long and tedious process as well.
It can be, and there are a couple of reasons why it takes a long time. One is that the lender may not be really motivated to get that going because nothing changes for them, right? They don't get paid out on the loan. The loan's exactly the same, so it's business as usual. So maybe they're not gonna make it a priority. And the second, more realistic reason is because they don't have the staff for it. So imagine you have the big companies with all these underwriting departments. Well, in order for someone to underwrite an assumable loan, they're gonna have to pull an underwriter from a different department. So I know one lender it was a big nationwide lender, had one underwriter nationwide for assumable loans.
What?
Which is why it was taking 3 months, 6 months to close. Wow. They have since pulled some more out, but you can see where it's a drain on their resources.
Yeah.
It's not like they don't want to do it because they want to keep that loan inside their portfolio.
Right.
But it's not a high priority.
Yeah.
It's not new business.
That makes sense. Okay.
Yeah.
Yeah. Thanks for getting into that, explaining that. And of course, another one of the loan products out there is the VA financing, right, with no money down. And we go into depth on that in the first video of our series. So make sure you click on the link there below. So John, can you share with us the benefits of working with a local lender rather than a lender or loan officer on the mainland?
Yeah, it's a really important thing. I think that a lot of buyers who move here or are going to move here don't realize just how important it is to have a loan officer here with boots on the ground who knows the lay of the land, so to speak, because it's cliche to say that Hawaii is special, But when it comes to lending, Hawaii is definitely special.
It is very special.
We have different things here that mainland folks just don't know about. The lenders, they just don't know. They may be licensed in Hawaii, which is fine. Maybe they close a few loans in Hawaii. But when you get a kind of a complicated situation like these condo-tels, condominium hotels with nightly rentals, we have leasehold properties. We have an escrow process that is not same-day funding closing. Like you don't get the keys the day you close the loan. You know, there's a 3 days. You know the whole thing there, right? So they don't know that. And there's lots of other things too that they don't understand, that they really have to have a local lender. It's almost like having a real estate agent on the mainland trying to sell a home here. Like they're not going to know how to do it, even though you know it's the basics are there, but the idiosyncratic things they're not going to understand.
Right, and for what it's worth too, I was in a situation where I had a mainland investor buying here, and you know he had several million to invest here, but he was just gung ho on using his lender on the mainland, and I politely shared with him, things are different here. You're going to run into lots of different circumstances that, you know, I appreciate your lender like doing like helping you out with investments on the mainland and everywhere else, but things are different here. You really want to work with a local lender. And they're like, Chris, please, you know, he's like, I'm going to just use my gal because she knows what she's doing. And so unfortunately what happens is that lender drove the sellers crazy. They drove the listing agent and sellers crazy because there's so many things that you need to know about the buildings and the situation, the different investment properties. There's tons of red tape. And they just, they didn't know how things worked here, and they missed deadlines, ended up losing the opportunity to purchase that investment property because they missed the deadlines and they just weren't on top of it, and it was really unfortunate.
Yeah, so that brings up a really important part that we don't talk about enough, is that not only does your lender need to be in Hawaii, but there should be a relationship. Because in that situation, if the lender was in Hawaii, you know, you could just call that person, you could just talk to that person, you could meet with that person, you could get it all sorted out, instead of wherever they were, phone calls, emails, miscommunication everywhere. So it's important that you have a lender who you trust and who your real estate agent trusts and has the experience in Hawaii of closing loans to be able to get the job done.
Yeah, that's so true. Yeah. Cool. Hey, John, thanks again for joining us in this segment, and it's really helpful to know. And again, what we're covering is the importance of working with a local lender as opposed to a lender or loan officer on the mainland. So hopefully this was worthwhile to you. And if you have any questions on what we covered today, reach out to John Keifer, and his information's below, okay? John, before we wrap up, is there anything else you wanted to share? And thanks again, man, for joining us today.
Yeah, thanks for having me. I appreciate it. I always enjoy talking about these type of topics because a lot of people don't understand how important it is to have a lender here in Hawaii if you're buying a home in Hawaii. So if I were to buy a home on the continent, I would go to that state and talk to that real estate agent who I'm working with and have them give me their best lender. Even though I have lenders here in Hawaii, we can do it every state, but they're not there. They're here. It's a huge difference.
There is, especially with the time gap as well, right?
Yes.
Yeah. Well, thanks again for joining us.
Okay.
Cool. So thanks for watching us today, and we appreciate your time. And if you have any questions, again, reach out to John Keifer or me when it comes to buying real estate in Hawaii. Until next time, have a good one. Aloha.